Hello, and welcome. Yet another episode of Going Elliptic. Usually Paul starts us off. Today I'm doing it, so we've got a little, change here, if you may, or a mix. And one of the other good things that is happening in today's episode is we are picking up a newer topic. So far we've been discussing trading, bringing on traders, talking about the market, looking at the technical indicators and charts. Today, we're going to look at another important segment of this investing world in the world of crypto, but this is more from the viewpoint of funds and the fundamentals and the thesis around it. And so therefore, we call this series Fundamentals or Fundamentals. So with that said, I think we look forward to an interesting first one in this series. Who do we have today, Paul?
Yeah, today we're going to have Felix Hartmann from Hartmann Capital. Now, he's been, in the crypto space as an investor for over 5 years now, and really set up Hartmann Capital to kind of be one of the more serious and one of those early crypto funds. So I'll bring him in, and welcome, Felix.
Hey guys, thanks for having me.
No problem. Now, obviously, we're not going to ask you to share any investment advice. This is all purely educational and conversational, but would love to hear more about your journey. And I've seen that you've been actively investing in DeFi, and it's obviously evolved a lot. Tell us about your journey.
Oh yeah, I've been a trader and investor since 2012. Back then, I started with equities and derivatives, but I fell down the crypto rabbit hole in multiple different stages. I think, as most of us do. First, I encountered Bitcoin in 2011. I was doing my first chart analysis 2014, and then I was a crowdfunding startup CEO, and we were the first crowdfunding platform to integrate with BitPay and Coinbase. So that put crypto right front and center on my radar. And that was the same year when Ethereum was maybe $4, $8, and it started moving to $50, which seemed like this big rally. And the trader in me woke up and said, "Hey, you know what? This is a multi-year breakout. There must be a reason for this coming out." What seemed to be death, right? Like the post Mt. Gox collapse, most people thought Bitcoin was done for, and all of a sudden it started climbing. So that's when I did my real deep dive into crypto. Watching all the Andreas Antonopoulos videos I could get my hands on, and after a short time I was like, "This is the future." I quit the startup, went full-time crypto trading, and now we're here. And along the way, I started the fund as well.
Excellent. So from that, what's been kind of the most fascinating and the most frustrating in that journey? Because obviously there's been a few bull and bear markets in that time.
I think it becomes less frustrating the longer you spend time in this space, because you understand that a lot of these pullbacks, corrections, crashes, and also just sentiment shifts are just a natural piece to it. So many times, I've noticed that people are very fickle. They change their sentiment from one day to the next. One day, DeFi is the future. The next, it was all a Ponzi. Or one day, Ethereum is dead and nobody's going to use Ethereum. The next day, everybody becomes an Ethereum maximalist. I think this was the most visible in late 2019, where everybody became a Bitcoin maximalist all of a sudden, and actually made a tweet somewhere around early summer. We're talking, I think, May of 2020, where I said, it's not going to take long, and all of a sudden everybody will be an Ethereum maximalist. And that's kind of where we ended up, right? And now we're seeing the next shift, where it's like, what if, now we've got contesters to Ethereum, especially now that Optimism is delayed. Ethereum 2.0 still has some time. Now there's some first projects being built on, whether it's Solana, BSC, AVEX, you name it. So that, going back to the question, that can be frustrating, but at this point I see opportunity in it, because I think once you, at first you might get so blindsided by it, you might seem like, oh, there's always things changing, always things happening. What's the true north? But understanding that this sector and this space is very thematic and very narrative driven, I think helps a lot getting some clear guidance of where the future is going, at least where the trend is going.
Yeah, well said. Well, it's very fascinating, your story, your journey, just having seen the ups and downs, and so much happened in the last few years. You mentioned something that catches my attention right away, which is that a lot of the space is very emotion-driven, thematic, sort of long-term driven. And I think that I perceive that being a fund manager, as someone who's running a fund, those perhaps play a role in it. So I think what would be interesting for us to understand, and I'm sure our listeners would love it too, is like, what's the thesis for Hartmann Capital? How do you approach it? What's the sort of underlying base principle, if you may?
Yeah. Everything that we invest in has to be fundamentally tokenomically wise sound. So that's just the basics. So thematically, we are very open-minded in the sense that in 2019, we already invested into DeFi. Back then, it was like things like Kyber Network, Ren, Maker. Those are the early DeFi players. We also allocated to early gaming blockchains, whether that was Engine or Mana, right? Those were already existing back then. Later on, we added things like Chili's. But so thematically, because of what I said earlier, that like it changes so fast, we have to also adapt our theses, which is why I said we're multi-strategy digital asset fund, and the themes we invest in changes over time. Because I think the worst thing somebody can do is say like, oh, we're pure NFT fund, and then now it's great. Now everything in NFTs is going up, but who knows? Maybe like 180-day NFT winter is going to come around, and there's nothing for it. Like you're just going to lose money every month. So instead, thematically, I adapt, but the thing that remains constant are the actual tokenomics I look for. Like, is this actually revenue generating? This is where we approach it more like an actual financial firm, where I look at, okay, how is this token generating value for the token holder? Is it more than just a Chuck E. Cheese ownership chip that makes a lot of the utility coins out there are worthless. So what we look for is our tokens that generate value for token holders and maybe even give them some voting rights.
Right. Yeah, makes sense. In fact, there's another follow-up that I want to dig in a little bit. Is you mentioned that obviously you aren't married to one or stuck to one thesis, and it changes as the market evolves. But there's another aspect of it that we see all the time, which is markets are extremely bullish, as we are seeing these days, and then they get into extreme winter, frozen territory, right? Total bearishness. And so how has that played in, if you may? Does that also play a big part in your thesis, or is that just secondary?
Well, not the thesis, but it affects our exposure, right? So we are a hedge fund, not a venture fund. And as a result, we mostly only touch tokens that are already liquid and that are on exchanges. So we do some private deals here and there, but it's less than 10% of our portfolio, which means that, for example, as we get more overheated like we are now, our exposure since December has been net zero, so net flat. So like for every dollar that we're long, we likely have $1 in puts or in dollar, like at least in delta, or shorts, right? So we do hedge our downside. So it might be that I might have a few million long in DeFi, but I also have a few million short in Ripple, as an example to cover my downside, or in Bitcoin puts, Ethereum puts. And on the flip side, when things are really bad, like we're the September after the DeFi summer ended, and everything was down like 60%, 80%, the thematics never changed, but that's when I got really bullish. That's when we bought, like we had maybe 160% exposure, because that's one of the few times where I allow myself to use some leverage is on down draws, not when we are already, up 5x.
Makes sense. Yeah.
So the thesis stay the same and the valuation methodologies changes stay the same. It's just where the market is affects how much are we really buying. Are we over? Are we have a deep exposure? Do we negative exposure, flat? So that's the real gauge for what makes us a hedge fund versus a venture fund.
Right. Yeah. The risk metrics keep changing.
Yeah,
that's great. And you touched on the core kind of tokenomics a bit there, and I was wondering whether the governance of those protocols is also a key factor there. How much do you want to see strong governance, the likes of Maker or others?
I do prefer it a lot because ultimately, if the governance isn't decentralized, then also the token flows can be changed any moment, right? So, and that goes both ways. So, for example, Uniswap right now doesn't, or a lot of protocols don't share revenue with token holders, right? Most times the revenue goes towards LPs, which has nothing really to do with the token. But ultimately, as long as a token has governance rights, you can make the argument that you're just one vote away from accruing value to the token holders. And ultimately, why wouldn't the token holders vote in favor of accruing value to the token? So I think as a baseline, I would almost rather see governance rights before value accrual, because value accrual can change at a hard speed if you don't have control over it. And that's something we're also looking for. Like one of the constants, like the thesis, like the themes might change. Themes are like DeFi, DWeb, NFTs, and so forth. The themes may change, but the constants are things like the token value, but also that a project is properly decentralized, meaning no admin keys, ideally DAO, ideally that the token gives you some voting rights too. And then we also go on Etherscan or wherever, and we check, how concentrated are the token balances. Like a token vote is meaningless if the team owns like 60% of the tokens, right? Because then they can just overrule everything. So those are also like a lot of the key things to look for, and no private entity behind it. I mean, when there's a private entity, I mean, not to beat the horse to death, but like Ripple, there's a conflict of interest. Are you trying to generate value for your entity, your stock, or are you trying to create value for the token? So we really try to focus in on the project that are truly decentralized with good tokenomics, where we can make some actual bets where we can go to sleep and know that there's some fundamental value holding this up. Like one of our big plays was Maker, for example, in December, where Maker had a $500 million market cap. Meanwhile, it had, I believe, 30 million in outstanding debts to be collected. So this was already earned. This was 30 million in buying pressure, because that 30 million was going straight into buying and burning Maker. That was already earned. And it had another 25 million in projected 1 year plus earnings. So now you had a cumulative of like 55 million in 1 year plus earnings that will be used to buy and burn Maker. The market cap is only 500 million, which is ludicrous. That means 10% of Maker supply would be destroyed if it stays at the current price. Of course, it didn't stay at the current price. It went to like $2,000 and did a nice 4x in 30 days. And that's also then when we unload it, because then it's a much more fair valuation, and look for something else with a similar setup where I know, like, hey, this makes just mathematical sense to go up in value. It's not just me praying.
Right. Yeah, absolutely. I think DeFi and decentralization in general have really taken off, and as you mentioned, they in some sense are maturing, right? From things that were more centralized, sort of projected as decentralized pieces, and now becoming really decentralized, right? DAO structures, ownerships, and decision making. So yeah, that's all fantastic, and we love that too. Another topic I want to jump on, Felix, is something that is making a lot of news lately. It's everywhere. It's literally everywhere. We saw the big deals, the Beeple's 60 million plus deal, and so much so that now it's become into mainstream media. Yesterday's SNL skit had one on it too.
Oh, really?
If you watch that, and even the likes of Marketplace and Kairos Dollar talking about it off late. So NFTs really made it into the mainstream, at least in terms of mind share.
Yeah.
So that's definitely happening. How do you look at that? Are you excited about it? Does it scare you? How do you view that? This sudden rise of NFT, if you may.
Yeah, we were allocated to a few plays in the space. I will say I got out way too soon. So for example, we bought Chili's when Chili's was like a cent, and Chili's went all the way to $1. I would have never imagined it would go to $1, especially because the irony is now Chili's, for reference, is we don't have exposure to it right now, so it's not me shilling it. I don't hold any. Chili's is a social token. It's a fan token platform. So there's like FC Barcelona has tokens, Real Madrid has tokens. They've got partnerships with the UFC and so forth. And the irony was that when it hit $1, Chili's was worth more than, I believe, Real Madrid, FC Barcelona, and Bayern Munich combined.
Okay.
So like on one hand, I'm like, this is innovative. This is awesome. I can definitely see us using fan tokens in the future, but should it really be worth more than like all the biggest, like 3 of the 4 biggest sports, soccer clubs in the world?
Right.
Probably not yet, at least, But I also remember, I think it was either George Soros or Stan Druckenmiller saying in the 2000s that Priceline was worth more than all the airlines combined. This doesn't make sense. But, I think fast forward, I think that, they ended up shorting the .com bubble, and they still lost everything pretty much. Like that's when George Soros shut down his fund, which is why I always say I think it's one of the most valuable things for an emerging fund manager to do is study hedge fund history. Because you can avoid a lot of mistakes. So that even though like I 100% think that a lot of this NFT stuff is crazy overvalued, I would never dare short it because even people with much bigger bankroll than me have gone bankrupt doing so. I was allocated to it. Right now, I'm just struggling finding interesting deals. So, one of the places we allocated to was, and this is the one time I went outside of my public thesis. I did a private deal with Idea Market because, I got like an 8 million valuation for something that's private, whereas everything that's traded on exchanges is like $1 billion plus. You literally have NFT protocols launch, and one day in, they're worth $1 billion. And that just doesn't make sense to me. So that's one of those things with crypto to understand, is that you have to be in these themes early on, because the repricings are vertical, right? Like nobody cared about Chili's. I held that thing for like 6 months at like 1 cent to 2 cent range. And then it goes through $1. So like if you're late to the theme, so to say, you already missed the boat, and you're probably just better off thinking about what could be the next theme and allocating to it without the stress. So I definitely think whatever we're living right now will be called NFT spring in a few months. And it will also end in an 80% pullback across the board, because they don't accrue any value. They don't accrue at least values relative to what they're worth right now. So, yeah.
Good point. Yeah. And I like that NFT spring phrase.
Yeah.
We'll probably end up using it. I think it probably is true as well. It really
like
is an
DeFi
NFT
summer,
spring. Exactly.
I think we didn't call it DeFi summer until summer was over. Like you're not aware of the season until the season passes, right?
That's true.
Yeah,
that's great.
and that's one thing we're going to be looking at in a little bit more detail with our Charted series this week is going to be the NFT kind of technical analysis. So that'll be the next video after this.
Awesome.
Yeah, and it's a difficult one, just to mention, like you said, because there isn't really a so-called direct NFT token out there, right? There are all these ecosystem players and, the fan tokens and platforms which are enabling NFTs. So it's an interesting market. And you're right, they all go parabolic. If they make it, they go parabolic. Otherwise, they don't exist, right? So that's the NFT spring.
I mean, the only way, the way I looked at it is if you break that theme down into smaller themes, you've got fan tokens, you've got social tokens, you've got actual NFT marketplaces like Rarible. And then you've got DAO. I've seen more and more DAOs pop up where, for example, I think Meta Factory is one of them. Scene House is another one of them. And disclaimer, some of those we hold. But the way it works is that essentially like a DAO of artists then goes and creates or buys NFTs. So then the DAO holds those NFTs. And if the NFT goes up in value, of course, so does the DAO. So there's been some interesting mechanisms around that. But otherwise, I think the NFT spring came faster than we could have launched tokens, which is why there just weren't that many to choose from. Whereas in DeFi, there was no shortage of DeFi coins.
Right. Yeah, that's true. That's a great point. Okay, moving on to another topic that you sort of touched upon when you were talking about Ethereum. And I think just like DeFi and NFT has been much spoken about, certainly it fills up the Twitterverse, and that is Ethereum scaling.
Yeah.
Right. Whether you talk about layer 2 or alternate chains or, just about everything else with respect to scaling.
Yeah.
Love to hear your viewpoint in it. What are you expecting there? Right. How do you see that emerging?
It's a tough one, because if anybody goes to my YouTube or stuff like that, they will find that I'm pretty much an ETH maxi, where I say pretty much any other chain has no chance because of all the traction, all the products on Ethereum. And unfortunately, now it's the right phrasing would be that was true until 6 months ago. Whereas now, PancakeSwap is doing as much volume as Uni is. And could there be some fake volume? Maybe, but I've started using PancakeSwap once in a while, Does it have more TVL than Uniswap? Yes, it does, right? So now we start seeing some actual traction. And for me, the tipping point was really kind of getting outside my own bubble, because I think the problem with a lot of people that were early in crypto is that we have more money than the average retail guy. Same thing goes for crypto funds, right? So a lot of crypto funds, we live inside our bubble because we get our 6-7 figure orders filled, and we don't care about $100 gas fee, right? But when I knew analysts start 2 weeks ago, and I was more doing listening than talking. I was like, what are you guys excited about? What are you guys using? Blah, blah, blah. And I heard them having Terra wallets, AVEX wallets, BSC wallets, and using this and that. And I was like, well, actually, that makes a lot of sense, because if you got $10,000 to your name, you don't want to spend $200 per trade. And so stepping outside of that own bubble where, it's not a problem to you, but it's a problem to 99% of the population, there is demand for these alternative chains. And what I started when I started thinking about it more is that the moat isn't necessarily Ethereum. The moat is EVM, right? The Ethereum virtual machine. And if all of a sudden you can just copy and paste code and take it from Ethereum to BSC to Avex, who else? I think Algorand is EVM compatible. There's at least 3 or 4 EVM compatible chains. And I was even talking with somebody from Near the other day. They're looking to add EVM compatibility as well. And nearly everybody wants to add EVM compatibility because that means you go to a project and you have 2 choices. You're going to become compatible with us, like for example, 1inch made itself BSC compatible. And if you don't choose to, we'll just make a copycat. Pancake looks identical to Sushi, right? Or like there's a new project called Swirl that looks identical to Tornado, right? So there's all these projects that's like you can either join us or we'll copy you. And it works. Sure. And the interesting thing that I started thinking about in regards to the project that I support more actively, I said, you know what? Right now, if somebody wants to, so for example, Octus is on both BSC and Ethereum. It's one of my activist investments. And to buy an option, you probably pay like $100 in gas fees. Meanwhile, maybe Octus makes, I don't know, $3, $5, $10 in fees, right? So I'm like, we can either be on Ethereum and of all the fees the user pays, we get the sliver, or the user pays a much smaller pie in fees, but we get everything, right? So instead of us getting $5, why don't we get $30 and the user still saves money? So I can very much see an appeal for projects to move to BSC or to other chains because they will be more fundamentally sound from an income perspective. And then they will probably see more growth. They'll probably see more investment. And ultimately also they'll see more users because now Idea Market, for example, that's the one we did a pre-seed investment in. It's a social token platform, but unfortunately, as long as right now they're working on moving to optimism, but until that's done, people are paying $200 to buy and sell social tokens. Who has the money? Aside from a couple of crypto funds, who's going to pay $200 to buy Felix token? Ironically, there was 8 people doing that, and I thank those 8 people. But other than that, it's just not. We're not going to get mainstream adoption until Ethereum goes to either optimism or some kind of layer 2. I'm not even saying ETH 2.0 because 2.0 is, according to their own timeline, it's going to take till 2023, I believe, to fully roll out. And I think that is an opportunity for these other chains that are EVM compatible to get some of that market share. So even though I think I was an ETH maxi, I'm an ETH maxi because I think it's, when it comes to decentralization, it's the best platform. At the end of the day, the only way to get money to BSC is through the Binance Bridge. And if CZ wants to suspend a certain token, they can, right? So for example, 2 weeks ago, I believe they suspended Ethereum. So you couldn't withdraw Ethereum from BSC back to ETH. So there are risks associated. But ultimately, I said this a couple hours ago to somebody. I said, in a bull market, people are here for the money. In a bear market, people are here for technology. So right now, people are here for the money. So if they want to trade, they want to make money trading. And that's not happening when they're paying, 10%, or if they have $1,000 account, they're paying 10% in fees. So if you had asked me 6 months ago, I would say ETH all the way. Now I'm saying just based on market demand and how it can help projects actually scale, there is a moat now for other platforms.
Yeah, well said. I also like that phrase of yours again, what you said, in the bull market, it's about the making money, and the bear market is when you think about all the tech and other kinds of issues. So it's kind of makes sense. Yeah, that's exactly what's happened as well. Now, apart from alternate chains, from your fund standpoint, do you also have interest, or are you also looking at all the layer 2 sort of technologies? I mean, you mentioned OVM, certainly that has taken some mind share. There's a bunch of ZK rollups and its sort of flavors. There's the Gluon rollups. There's Matic with sort of 0x Polygon, and I'm sure a few more months and we're likely to see a few more, right? So is that an area as well that you're tracking, something that's of interest to you?
The four that come to mind are, Optimism, Arbitrum, Polygon, formerly Matic, and ZK. My main issue with layer 2 until we have a winner is that you're losing composability one way or the other. So moving to Optimism is no better than moving to BSC until you have all the other protocols there, right? So for example, Paul and I are on the Enzyme Council, and for Enzyme to move anywhere, it doesn't matter whether it's BSC, Optimism, Arbitrum, anywhere, you'd need all the other protocols that we interact with on the same layer, right? So for somebody to make a synthetics trade on Enzyme, we need to be on the same chain as synthetics is, right? So because synthetics is moving to Optimism, I mean, I think the founder, what's his name? He's pretty much one and the same with Optimism, right? He's one of the main guys that pushes it. I think Kane.
Right.
And then Uni, I think, is also talking about Optimism, but Optimism is not happening till July. So until a week ago when the delay was announced, Optimism seemed like the move. I mean, I think we discussed, Optimism with several of my projects. I think every single one of my projects talked about Optimism. Now it's like, well, we can't wait till July. Where else do we go? And that's where I don't know, right? So I think for me, the clear short-term thesis is BSC. And again, I say it's a short-term thesis. I think there's money to be made on momentum trades with Binance Smart Chain, especially with the copycat products. And then whenever we get closer to either layer 2 launching on Ethereum or 2.0, which is going to be a long time, I think there might be a very underpriced opportunity for Ethereum. So I very much look forward to that, because I think there is a future version here, a version of the future where maybe Ethereum pulls back, and maybe Ethereum goes back to $1,000 because people think BSC will flip Ethereum and this is it for Ethereum. They forget that Ethereum is the only properly decentralized blockchain, and that there's a lot of Ethereum loyalists. There's a lot of great projects to build Ethereum, and I think the ethics of Ethereum are probably higher than most other chains. And when that comes, I'll probably be extremely long Ethereum. I mean, I'll be probably 100% long Ethereum. But we're not there yet. I think right now Ethereum is just in a tricky spot.
Right. You mentioned BSC is gaining traction. I've also played a little bit with it. I have to agree with you. I think there's a lot of energy there for sure. It's getting a lot of the retail attention in the bull market. There's no two ways on that. Do you think we'll also see a lot of interesting price action on BNB then? And again, this is not investment advice, but just want to pick your brains. What do you think of that?
100%. I mean, I think it already happened. Quite frankly,
Sure.
The funny thing is, back in 2018 when everything crashed, I finally bought myself like 500 BNB, because that's what you need to get the big referral bonus. So back then, to get the big referral bonus, how much did it cost you? It cost you $2,000. BNB is trading at like $250 now,
right.
Which means 500 is what, like $200,000? Sorry, not $125,000.
Right.
It costs you $125,000 to get the big rewards. So like BNB has done quite the repricing. And unfortunately, every single time I have to flat on BNB and it makes like a couple of extra return, I'm like, oh, let me just take that. Forget the referral. So I think I sold like 60. So yeah, it went up a lot more. But the bottom line is I could see more growth. I think BNB is an incredible investment, with the only downside is that you have some form of centralization risk. I mean, because even without BNB had a lot of good tokenomics from like Binance, the platform, making money, then being used to buy and burn. You have good token things where you need BNB, the token, to be part of launch pads. Like, I mean, Binance is amazing at doing great tokenomics. Again, the only risk is that if there ever is some kind of crackdown on Binance, similar we saw with BitMEX, I would imagine that the BNB token price will go a similar route as the company. But then the question is, has BNB become too big to fail, where it's such a big part of the crypto ecosystem, with all that it does, being the biggest exchange, it now having its own chain that's the second most active after Ethereum. I don't know if anybody can even stop CZ. So if you subscribe to the idea that CZ cannot be stopped and Binance is, too big to fail, then I think BNB is probably one of the safest investments out there, just based on tokenomics and actual revenues and incomes.
Right.
It's fascinating. Yeah. And yeah, definitely, as you articulated there, that journey from being exchange token to a network asset. And we've seen that in the repricing already, but yeah, it will be really interesting to see how it plays out over the rest of the year. Yeah,
and ultimately, I mean, that, even though like probably on this, I'll sound extremely bullish on BSC, but like long term, I am an ETH bull. I think ETH will continue to attract the right talent, because ultimately, here's the thing, like it's easy to copy code, but to keep innovating and push it forward, like you need those people that actually, believe in technology, that are here for decentralization. So I do think that in the short term, we will see, we do see a lot of growth in BSC, but after 6 months, you will start noticing, wait, there's always better products on Ethereum, or maybe products get less rug pulled, or, they're more audited, they're safer, because you can copy, let's say you copy and paste, try copy and pasting Enzyme. Well, you can't copy and paste all the different integrations, right? And then we spend a lot of money on audits, right? Like that, if you want to copy and paste, you can't copy and paste an audit, right? And the audit goes towards the actual code. So I think short-term play, momentum, BSC and other chains, but then never losing an eye on Ethereum, never betting against Ethereum, and just knowing that when the time comes, when we're close to scaling, to really bet big on it again.
Fantastic.
Awesome. Great.
Or do we have any user questions?
No. The few that have come up, we've already kind of answered there. So that was great. I think people are just, really in the same flow. So let's jump into rapid fire. So awesome. Felix, we're going to hit you with 5 questions, each fairly succinct answers. If you had to choose one of the following to invest in, would it be an NFT, yield farming protocol, or a scaling protocol?
Scaling.
Yep. Nice. Okay. And then in one sentence, what's possible now in 2021 that just wasn't possible in the previous bull run in 2017?
Pretty much everything other than raising money.
Yeah.
I mean, I always say like 2017 was like white paper dreams. I mean, there was nothing. There was absolutely nothing, which made running a fund very hard, because you're betting based on ideas and potential. Now there's traction that you can bet on.
Very nice. So yeah, in your opinion, what's the single biggest use case for crypto in, say, 5-10 years out?
Tough one. I do think, well, I think the obvious one would be decentralized finance, but I also very much think that decentralized governance will become a really big theme. I don't know if it's going to be this year or next year, but like DAO infrastructure is something I'm very bullish on, because I think once every single LLC turns into a DAO, once every single entity it decentralizes, again, then you also become borderless, just like crypto teams are everywhere, nowhere, so they become much less attackable. I would imagine that the future startup in 2 years from now, 2 years already, most startups will probably start as a DAO, not as an LLC. That would be my aggressive bet for like the next 24 months.
That's fascinating. All right. So yeah, complete the sentence. DeFi makes
free. Free. I mean, ultimately, I have 99% of my net worth in crypto, but also I've got most of my net worth on chain. By now, I trusted way more than banking, not just trusting banks, but also efficient. I remember the other day I had to do wire from a bank account. It took 40 minutes of them clicking in, typing in things. I had to walk there, 40 minutes spent there, $50 wire fee because it was international. And I'm like, this could have been done in 5 seconds, me copying a 0x code. And that's and beyond just the sending. I mean, that's just sending. In that 40 minutes, who knows? I could have found like a quintillion APY farm somewhere and double money. I'm kidding. But yes.
Nice. Yeah, it's definitely freedom, right? It's something everybody's looking for. And yeah, in less than 60 seconds, what would you tell a new investor? Is there some fundamental that you can pass on?
Okay, 6 seconds. Well, if you're going to invest in crypto, first of all, start with Bitcoin and Ethereum. With those, you make a big enough sector bet. Then don't stop investing and start studying first, because there's so many mistakes you can make. Focus more on primary data. So don't listen to message boards. Don't listen to Twitter. Just focus on actual primary data and always look for how does this generate value for token holders, right? You should be very clearly like A plus B equals C. Where does a project make money? And does this money go towards token holders in what way? Is it staking returns? Is it token burns? Somehow the token has to achieve value, because if it doesn't, then long term, it's probably going to be a bubble, or long term, if we go into a bear market, there will be nothing holding it up. But bear markets can't be erased. But as long as there's something holding up the price fundamentally, like real earnings, you should be fine no matter how bad a pullback gets.
Fantastic.
Excellent.
Awesome.
Great. Well, yeah, thanks, Felix, for joining us on the show. That was, really good to cover such a broad range of topics, and equally to hear your passion for the DeFi space and how you see things playing out coming ahead. So thank you.
Amazing. Thanks for having me.
Thank you. It was fantastic.
Awesome. Well, take care, guys.
Cheers. Great. Shanky, what do we have coming up next?
Yeah, well, firstly, we had a great chat with Felix. I think that was phenomenal. I learned a lot just from all the interesting things that Felix shared. There are a couple of things today, later today, and then of course the excitement continues through to the next few weekends and beyond. We'll do a chartered session later in the day today, perhaps about a few hours out, 4 or 5 hours out. We could do a live broadcast just like we did last weekend and cover some interesting topics like NFTs that everyone sort of got their eyes on. Check back on DeFi, how that's doing, and also look at a few indicators like we've done in the last few sessions. So that's definitely coming today. Paul, what about the newsletter? Are we bringing that out as well today?
Yes, yep. We'll also get the first release out of the newsletter, which is going to cover some of the DeFi correlation analysis we did last week, and also some of the topics we're covering around NFTs and DeFi today. So yeah, it's going to be exciting. So we don't want you to miss out. So definitely like, subscribe, either here on YouTube or on Twitter. It's always at Going Elliptic, and the newsletter will be out shortly on goingelliptic.substack.com.
Excellent. Fantastic. Well, all the viewers, thank you for joining us. We are here for you. And the idea, as Paul has mentioned earlier today, and we have said so many times, the idea here is education. Don't think of this or treat this as investment advice, because it isn't. What this is some good content, hopefully content that you hear from people who are deep in the trenches, people who are working through as either investors, traders, and later we'll have other sorts of people as well. And you learn from them, and then you take what you want to take and apply it to your own journey. So thanks again for joining. Excellent.
All right. See you next time.